Happy Bitcoin Tuesdays, freaks. It's your boy Odell here for another Citadel Dispatch show, interactive live show focused on actionable discussion around Bitcoin and freedom tech. As always, I want to thank the supporters of our show. Our show Dispatch has no ads, no sponsors, and is funded by our audience through Bitcoin donations. Could not do it without you guys. I really do appreciate all the support. The easiest way to support the show is through podcasting 2.0 apps such as Fountain Podcasts, Breeze, Echo LN. I believe you can go to newpodcastapps.com and they have a list of different podcasting apps that support it. They work like regular podcasting apps. You install the app, you search Citadel Dispatch, you press the subscribe button, and then you can choose how many sats per minute you think the show is worth, and they get streamed directly to my node as you listen. It's really fucking powerful seeing the sats stream in minute by minute. Recently, I set up something called geyser.fund, which acts as a transparent leaderboard for podcasting 2.0 and just audience funding in general. If you're not using a podcasting 2.0 app, you can also search Citadel Dispatch in your favorite podcast app, YouTube, Twitch, Rumble, Bitcoin TV. We stream to Twitter, and they all show up on geyser.fund. So I set up a redirect. If you go to satspermit.com or satsfundme.com, you can see that. I'm just going to pull it up on my screen really quickly for the people watching through video. This is what it looks like. And as you can see, there is a live view of how many sats are getting contributed to the show. We're trying to do some radical transparency here. It's refreshing. So just give it a minute. But these all go directly to my node. So it's self-custody. We're not trusting Geyser custody. They're just showing all of the different sats as they come in. If you're using Fountain, it'll show your Fountain username. They have a live leaderboard that shows people over time, different freaks out there, how much sats they've supported. So the leaderboard is really fucking cool to see. And if you're not using a podcasting 2.0 app, you can just press this contribute button, choose how much you want to contribute, and you can leave a message if you want to leave a message. You can drop a GIF, and then you can donate either through Lightning or on chain. So once again, I appreciate all your support. It's really powerful. A lot of people think value for value can't work. A lot of people think the ad model is the only way. I think we can prove them wrong. I'm going to keep doing these dispatches and keep relying on all your support. So thank you to all the freaks who continue to support. With all that said, let me bring us back to the mempool page with the live chat. Every week I read out supporters. Well, now everyone can see them on that geyser.fund page, right? So this week, instead of just 4, I decided to highlight 21 of them. Let me just pull this up real quick. To all the freaks that are also watching the Men's World Cup game, USA is up 1-0. Let's fucking go. Let's see. I'm going to hide this. So these are some contributions that we've gotten this week. We have our largest single donation that Citadel Dispatch has received through Podcasting 2.0, which is from Quinn Solo, Ride or Die Freak, who created some awesome. He has all this different customized leather items that you can buy with Bitcoin, including a dispatch flask that I use. And he said, circular economy for the win, stacking sats with quinsolo.com since 2017. Love you, Odell. Thanks for keeping us grounded. Stay humble and don't leave us too soon. He gave 900,000 sats. We have an anonymous funder that said, Sergey always has a sobering perspective. Awesome stuff. Keep pushing out episodes that focus on building Bitcoin businesses and using the tools IRL. Coin Cards has great usage stats this month, over a month as well, that people can look at. We have an anonymous funder that only contributed 1,800 sats, but his message was, Odell, if you can read this, I am wrong. I doubt I am wrong. You are wrong, sir. I can read this, and so can everybody else on the geyser.fund page. We have another guy with 500,000 sats, anonymous funder. Odell, longtime fan, first-time donor. Appreciate you, brother. I've avoided losing my sats thanks to you. Here's a toast for you onboarding the next wave of Bitcoiners. 604,000 sats from a different anonymous funder. Taught me most of what I know, kept me on the straight and narrow path. Humble sat stacker. P.S. Someday I will get a CD hat. If you go to mattodell.com, all my contact information is there, and we can coordinate you buying a dispatch hat if you message me on one of those platforms. What else do we have here? We have at Dude on Fountain Podcast explaining to me that if you boost from other apps, you cannot see it on Fountain, and that he sent his money to Fountain just to post that boostergram, 45,000 sats. From now on, I've learned that Fountain will show the boostergrams because I put them into a 1% cut in the split. So when you stream sats to the show, not only do they come to supporting the show, they also support open source projects like Sparrow Wallet, Zeus Wallet, Seed Signer. Really cool. Like as you're streaming sats, literally, I don't take custody. They come to me when they also go to these open source projects. Well, now 1% also goes to Fountain. So if you're a Fountain podcast user, you'll see boosts from all of the different podcasting 2.0 apps. Previously, because I wasn't using their custodial wallet and I was using my own node, you couldn't see that. I'm not going to read all of these because it's too much. There was another one that was really big here. Dispatch saved me from Celsius, BlockFi, and FTX. I will forever be grateful. 150,000 sats. Love to hear that. Really does make it all worth it. Well, anyway, freaks, once again, you can go to satsperminute.com and you can see a live look of all of the different supporters, a leaderboard. I just appreciate you all. So thank you. I know that was a long running intro, but the geyser.fun stuff is just really cool. And it's just awesome to see the support. Also, you guys got dispatched to the top of the podcast hot charts on Fountain Podcast, which means it was streamed the most sats through Fountain. Just to be clear, it's come to my attention that that's not like an overall podcasting 2.0 leaderboard. That's only for Fountain users, but it's still great to see. Last but not least, thanks to the freaks who continue to join us in the live chat. You guys make this show unique. We have the Matrix chat, we have the YouTube chat, we have the Twitch chat. It's all streamed directly into the show, live, unedited, not moderated, except for whatever algorithmic bullshit that YouTube and Twitch are doing. So with all that said, I have a great two guests here. We're going to be talking about a wide ranging of topics, including the macro environment, just the current state of Bitcoin fundamentals, self-custody all-time high, and the shitcoin apocalypse. To start us off, we have Dylan LeClaire, longtime freak, first-time guest, good friend. How's it going, Dylan?
What's up, Matt? Check. Excited for this one. It's going to be a good rip. We have a lot to talk about, I think. It's been a vindicating, even though it's been somewhat of a shit month for the Bitcoin exchange rate. It's been a vindicating one from the maximalist perspective. And you've been, your podcast with Marty, just a lot of the things that you've been hammering home over the last for me 2 years as long as I've been listening, but you've been hammering these points home much longer, and have been proven right about a lot of things. So I'm just excited to rip with you on it.
Fuck yeah. Well, it's great to finally have you on the show. It's been a long time in the making. And we have friend of the show as well, Checkmate, over here. How's it going, Checkmate?
G'day, folks. Great to be here, mate. And as Dylan mentioned, the thing I'm certainly looking forward to is a spot-driven market, right? We've seen all the leverage get purged and the free market do its thing. And now that we're sitting in the embers of this forest fire, it's good to kind of come back and assess what's happened, and try and chart a path forward, which is always good fun. But thanks for having me on.
Cheers to that. So maybe we should, Dispatch is a wide open discussion show, but maybe we should start with that. Let's start with, so Checkmate is what we would call a good guy chain analysis guy. He's not in the chain surveillance business, but he works for Glassnode that analyzes on-chain transparent data. So he's not actually trying to surveil individual users. He's trying to take metrics out from the chain data. And I was talking to Checkmate the other day, and we were talking about self-custody. And I'm pretty sure that self-custody right now is at an all-time high. Bitcoiners holding their own keys and holding their own Bitcoin is at an all-time high. And I would go as far as saying that if you don't hold your own keys, you're not a Bitcoiner. So right now, in the history of Bitcoin, we have the most Bitcoiners that we've ever had. Would you agree with that, Checkmate?
Yeah. So if you kind of look, there's a lot of metrics, and as you mentioned, certainly what we're doing is not tracking individuals. We look at. I think the best way to think about on-chain analytics is we're economists, and I like to take it one step further and say behavioral economists. We're looking at how Bitcoiners are using Bitcoin, right, on scale, and it's in mass. And what we're basically seeing is in the wake of FTX, and I mean it's obviously been almost 2 weeks now, or 2.5 weeks. We are continuing to see pretty much
Wait, it's
every.
only been 2 weeks?
It's wild, yeah. I think so. I mean, what was
Three.
it?
I think it's 3. Collapse on the 8th.
Three. I mean, there you go, right? Life in this space. I think
Feels like a
so.
decade.
I normally measure from the 6th of November. That's kind of the baseline pre FTX. And then the largest, we've seen lots of activity. You tend to see a peak somewhere, right? Peak fear, peak realized loss. That was somewhere around the 16th to the 18th. So that was kind of the timeline. And here we are at the back end of the month. But anyway, on self custody. So 3 weeks later, we are still seeing the outflow of exchanges. It's an all-time high, record high. So if we look at it in terms of a monthly flow, we do this a lot at Glassnode. You'll see it called net position change. What we're looking at is the 30-day change, right? How has a particular metric changed over the course of the last month? And what we've seen is, I think it's about 180,000 BTC per month flowing out. Right now that we're 3 weeks in, right? That multiply that by 3/4 of a month. It's a significant sum, and it's quite interesting because it's going into the hands of pretty much all wallet cohorts. So when we're looking at all the economic data on chain, we can break down different wallet cohorts. We can see shrimp, we can see crabs, and there's all sorts of sea creatures we can kind of break it down into. The only cohort that's not participating to a significant extent is whales, and these are 1,000 BTC plus. Now they're not exactly they're in this very interesting regime where their balance is already very high, right? They have like 6 million BTC in total, and they've deposited something like 6,000 on net. So they're on net sending coins into exchanges, but 6,000 BTC is over a 30-day period is very, very small relative to their holdings. So whales are the ones that I would argue effectively flat. Pretty much every single other wallet cohort, all the way up to that 1,000 BTC level, is, if not all-time high, multi-year high in terms of the amount that their balances are increasing. So there's no question that there's been a significant spooking of the market. And look, this self-custody element is going to have a few different roles, right? Some people are taking it out because they're like, which one of these casinos goes down next? There's other ones where there's going to be Bitcoiners who were just taught the very hard lesson of either experiencing loss or seeing loss at a mass scale, and are finally doing that record, take my coins off exchanges, now I'm on chain. And you can back this up with other anecdotal data, like Ledger and Trezor are saying they had all-time high sales. I'm sure that Rodolfo would say the same thing. Exactly. So, I when I look at that whole spread of information, 88% of the supply is now off exchanges. It's the largest we've seen since December 2017. And the way I look at that, every coin that's flowed into an exchange since the December 2017 top is now in some guy's wallet, which love to see it.
And the USA just scored their second goal. So
Let's go.
when we're thinking about December 2017 was the last time we were at this exchange level.
Yeah, on a so not on a per coin basis. I like to look at it. It's actually better than that. I like to look at it on a percent of supply. So as you can imagine, over the last 5 years, there's been a whole bunch of coins mined. So all of those as well have also either not flowed into exchanges or flowed in and then flowed out.
Interesting. What do you think about? Okay, so I mean, let's go on this tangent for a little bit. So Dylan, like you've been talking a lot about the exchange flows out. I mean, anecdotally, I've had so many people finally reach out to me about self custody. I mean, I posted on Twitter today. I like personally set up people like 20 different people with cold cards and self custody for the first time. I mean, I think this is a bigger learning experience for people than every podcast, video, YouTube video, book combined. Like this, some people just have to touch the stove. They learn their lesson. A lot of people trusted FTX. It was one of, they had a Super Bowl ad. A shit ton of people got burned on BlockFi. Even more, like I have so many friends that got burned on Gemini Earn. Ironically enough, I mean, I just feel like that was considered like a very quietly trusted one. So no custodian is safe. They've never been safe, but people are finally coming to terms with that. So, I mean, Dylan, you've been posting a lot. You like kind of stepped away from the on-chain stuff, even though you were more focused on the on-chain like a year ago, maybe a year and a half ago. But you've been posting a lot about the exchange outflows. What are you thinking from that perspective?
Well, yeah, I mean, I think more so. I just kind of as a market analyst, I like to weigh a few different things, and like say go back to the top of the market last year. The interesting dichotomy was that there was like from a hodling standpoint, you had a really strong like on the second leg of that double bubble almost. You had not almost. We made a new high, 69K. It was really interesting because you saw like there were certain things like long-term holders or supply held for XYZ amount of time that was like pushing new highs, right? And from like Bitcoin is obviously absolutely scarce in the supply inelasticity of it. I guess the one thing that not the one thing, but one of the things that I weighted a little bit wrong was the supply inelasticity cuts both ways. And so if the marginal seller is strong because of whether it's macro fears or because they're a forced seller or whatnot, you can have 80%, 85% of the float that's not moving, not selling, not doing anything, and the price can fall. So that's what we've seen, I think, so far. As a result of FTX, as you guys have both said, there's been a mass outflow from exchanges, and I think that's good. Honestly, I think what we need to do here and what will eventually happen. I mean, what's happening right now as we speak is you're pulling all of this supply off exchanges. Bitcoin always bottoms, and really any asset bottoms, but Bitcoin bottoms when the marginal seller is exhausted, and for an absolutely scarce asset that can be withdrawn to custody as long as the exchange isn't fraudulent or locks you in 10 minutes, right? And in a verifiable manner. This is the difference between Bitcoin and gold, right? Is like, how does Bitcoin, like people, you often see the macro people or the old boomers who are dismissive of Bitcoin. They say, it's going to suffer the same fate as gold. And the reality of what's happening, and it's sort of ironic or paradoxical in a way, that what we've done over the last 6 months with Bitcoin's exchange rate plummeting by 60% is we've just smashed all this paper Bitcoin. We've just imploded it. It's just gone into oblivion, right? And at the same time, the free float supply is more constrained than ever. So I think that's what we're doing. We're finding, we're gonna, whether it's here or lower or if the bottom's in, I mean, I don't know, but eventually
called the bottom at 15.5 last
called
week.
it. Love it. Yeah, I mean,
it was literally trading at a 15.5. I was asked to call the bottom. We all undenied about it, but that has to be it.
Yeah, I mean, I freaking hope so. We'll see if there's any more freaking fraud under the surface. But I think for the most part, we've got this leverage wiped out. Whether another risk-off wave happens in legacy, we'll see. But in terms of like the amount of forced selling that we've seen over the last 6 months, it's been massive, right? With all these Ponzi's imploding, and the shitcoin. Like the only reason I pay attention to shitcoins, like posts it, about FTT or Luna or all this garbage, right? Like I have no interest in buying this stuff. The only reason I watch it is because as like someone that's interested in the Bitcoin market is because the whole space is cross collateralized for better or worse. So we're gonna implode all this garbage.
Yeah.
And Bitcoin, what is that? 15K. It's like what, like 75% from the highs, 80%, something like that. I mean, certainly like the macro isn't all that conducive, right? But at some point, and I think it's probably pretty damn close to here, the amount of price agnostic accumulators of Bitcoin is enough to stave off any and all marginal selling pressure. And then we're going to have a scenario where the people shorting on Binance and the boomers that are on CME or buying or buying the short ETF or shorting like Beto, right? These guys are going to get smoked. Like Bitcoin open interest on CME is at an all-time low. The basis, like Bitcoin's price on CME versus like the spot market rate is at an all-time low. It's never been lower. It's never been more negative. So at some point, these guys all get their face ripped off. And I think that's really, really exciting. Like we're setting up here, and I think we have some time to chop around. But supply accumulation, these guys shorting with fiat denominated collateral, right? Like we've seen this story play out before. And the funny thing is everyone thinks in the mainstream that Bitcoin is dead.
Well, I mean, like, let's unpack this for a little bit because, I mean, this has been my thesis for a while, which is that Bitcoin's not immune from paper Bitcoin like we've had with paper gold. But pretty much as long as there is a convicted base of Bitcoin stackers, sat stackers, if you will, that are stacking sats, not IOUs, and actually withdrawing it to their own wallet, anyone who plays these games will get wrecked eventually. And we saw it with FTX. FTX, how much in Bitcoin liabilities? Like 1.4 billion in Bitcoin liabilities, and they had nothing on they own no Bitcoin.
I think they probably, well, maybe not sold it all, but they were I don't know. I don't think, like, check, do you think they were running a Bitcoin deficit for a while, or do you think it was in the last hour when they were trying to prop up FTT that they sold it all and you also had a bank run at the same time?
Hard to tell, but my view on a lot of this thing is when you start looking at if you look at just their exchange balance. So for a bit of context, FTX, this is coming from our data team. So the way that we track exchanges, we've got a suite of, or a team of very experienced data scientists. They observe how wallets behave, right? How does Coinbase manage their wallet? How does FTX manage their wallet? And that may sound easy, but I assure you it's not. They're always changing the way that they do it. How do you know that a cold wallet or a hot wallet is Coinbase or Binance until it interacts with another set that you know is Coinbase or Binance? And they've always got multiple of these things running around. Anyway, FTX was one of the hardest. Coinbase is also very difficult to track, but FTX was one of the absolute hardest to track. They had some very strange peeling chain behaviors, all this kind of stuff. Now, when I go back, and this is the thing, right? There's lots of stuff that you kind of notice in hindsight, but also I wasn't, in the business of looking for fraud at that point in time. But the more time you as information comes to light, you start looking at the FTX exchange balances for, this is what I found quite interesting, for BTC and ETH, right? If you look at both of those, in May when Luna collapsed, what we saw is I think it was like a 52% drop in their overall exchange balances. It was either when Luna collapsed in May or the sell-off down below 20K when all the other lenders blew up in June. So somewhere in there, their exchange balances of BTC and ETH went down 50%. I think it was something on the order of about $2 billion worth or thereabouts. And at the same time, the stablecoin balances on FTX increased by about 900 million, I think it was. So what was that? Was that a bunch of coins, customer coins that got sent to somewhere to borrow stables to then go and prop up some of these things? It is hard to tell. And there's going to be a whole lot of forensics that will take, I would say, years to actually fully unpick what the hell happened. But based on what I've seen, it looks like they probably blew up back then in May and June. 3 arrows. I mean, this is the thing, right? So when we kind of look at what's still left to burn in terms of liquidations and forced sellers and that kind of thing, And again, we don't know what the future holds, and DCG is obviously another catalyst. It could be more that follows after that if that goes pear-shaped. But if we think about what happened in June, every single lender who was going to blow up at that point in time did. They were then saved, in inverted commas, by FTX, and FTX then blew up 6 months later. But essentially, we'd already seen what the impact was going to look like. If FTX didn't step in, we already had a pretty good flavor of what was about to happen. So in many ways, FTX should have been the start of this whole implosion. Through a series of unfortunate events, it turned out being the tail end of it. But I do think it's the tail end of it, right? I think we've seen a vast majority of the damage in terms of like which entities were left to go. I mean, BlockFi yesterday, I think it was, did bankruptcy. And I don't think anyone was surprised, right? This is not new information or new news. This was, pretty priced in, and I think the market literally didn't move. So we're getting to the point now where most of the information is known, in my view. Again, there could still be some skeletons out there, but I think that we've now had 6-7 months almost for those skeletons to come and surface. And FTX was certainly the one that surprised everyone because of its magnitude, but it looks like they were up to no good from June onwards. But to be perfectly honest, the thing that I always found very bizarre is that FTX's exchange balances were never large enough to. That said, I mean, me as an Australian, there's very little time that I spend kind of understanding what FTX's role, and like many people, it just kind of came out of nowhere. And I think there was a lot of US folks trading on it, and I hear a lot of institutions, right? Which is a really interesting dynamic because to me, FTX, there was something about it that never quite worked for me. I hated the UX, and there's a lot of reasons why I personally didn't use it. But I was surprised by how small their balance was relative to what their perceived size of the exchange was, which obviously turns out to be very large. And when I kind of go back and look at that, initially I was like, well, I keep hearing these stories that it's really hard to track these wallets, and no one's been able to find their cold wallets, and they have lots of interesting obfuscation techniques, which I guess you could argue from one angle is a competitive edge, right? You don't want Binance knowing what your wallets are because that gives him some kind of edge over you. But you also would do that if you're a criminal, right? So these two sit side by side. You don't know which one it is before the event, but the strange wallet practices make a whole lot of sense now, and this was always the case. So, these are this kind of things where you got to look for smoke at all times.
I mean, the TLDR is they were probably running a fractional reserve the whole time, or at least
I think that's the case.
Or if they were fully reserved, it was because of shitcoins that were at ridiculous valuations that they hold the majority of.
And then even just
like
things
FTT
like you've
or
seen
something.
the talk about these financial transactions, right? People are sending and wiring money to Alameda, which then gets deposited to their account at FTX. Like that there, that's a fiat problem. That's basically showing that these two were just interlinked at the whole stay, which, having a hedge fund being your depositor for an exchange is just wild.
It's really interesting. We did a deep dive on this. We did a deep dive on this for Bitcoin Magazine Pro. We just kind of released it, like detailing, the FTX rise and collapse. And if you guys remember during the bull market, you had like the quote unquote Sam coins, right? Which all pumped super, super hard. And these were
like Maps and Oxy and shit, right?
Oh my God. It is literally such a massive joke. These guys, they spun up worthless, like Maps, which I forget the fully diluted valuation at the top. It was something like tens of billions of dollars. These market caps, Maps and Oxy, had fully diluted market caps. So like the circulating supply of these tokens that's not yet the total amount that will ever exist versus the current float of like 200x relative to their circulating supply, right? So I created, my token trades for $100, but all the tokens ever will be $2,000. I'm sorry, it'll be $20,000. And so like this dynamic, they listed these things on the spot market on FTX, and for every single exchange, for every single token, right, Bitcoin or ETH or whatever, they list the spot market and the derivative market. And with FTX, this was mapped out. You could cross collateralize anything. You could collateralize your Bitcoin derivative position with Dogecoin if you wanted to, which is just madness. But regardless, these tokens that they spun up in early 2021, like Maps was a DeFi was a map, like literally like Apple Maps, Google Maps with a DeFi wallet in it, which of course needed its own token. And they'd list it on the spot market, they'd pump it with Alameda, and then they'd list the perps market, like perpetual swaps, and they would hedge out as much as they could, dump as much as they could via perps. So like as a VC, your coins are locked, right? This is like the magic thing with smart contracts in the blockchain. It's like, oh, it's not vested legally. It's like, your stake is locked. So they pump these things to oblivion, and then they'd go out and they just immediately dump like all the the FTX perpetual swap contracts, specifically like the Solana coins, down only from the day of the listing price. And this was kind of like a running joke. There was a couple of running jokes that Solana coins, Sam coins, when they were listed on perps, were down only, and that Alameda and FTX were like separate entities. Like the people on crypto Twitter kind of knew that they weren't, or that like, the Arthur Hayes style BitMEX of like basically having all the proprietary data to like run your users' stops and liquidate them.
Right.
Like, this was kind of a known
trade against their users.
Like this was known. And so the thing that really blew my mind was that when the first red flag for me, this was over the summer, I was kind of, in the weeds of crypto Twitter, because I like to pay attention to these things. And there was a couple people that were just making jokes about Sam and him swimming naked and being levered to the tits, and it being a giant psyop that he was coming out and bailing everyone out. And he was, bailing out Voyager and bailing out BlockFi with credit lines or something. And then Voyager goes bankrupt, right? And the docs come out, and Alameda's, bailing this firm out, or FTX or whoever the officially was doing it.
Yeah.
And they were a creditor, or I'm sorry, they were a debtor to Voyager to the tune of $370 million. And it was like I didn't know why. I didn't know if they just wanted to keep the line open so that Voyager was getting some interest income or whatever the reason. Or I was one of the things I proposed. I posted this on Twitter. I was like, I don't know the denomination of this debt. Maybe they borrowed Bitcoin and they're short selling or something, right? That's possible, like crypto denominated loans between these firms. And so I just kind of noted that mentally. And then the CoinDesk bombshell comes out. And I was also surprised that people on crypto Twitter weren't making a bigger deal out of this, because it was like, they have $14 billion of assets, right? And you go look at, I've never looked at the FTX market cap or FTT market cap in my life. And this shitcoin literally just gaps from $2 to $20 or whatever it was. And they're marking it to market for billions of dollars of assets.
And using it as collateral.
And yeah, who knows? Like, we didn't know what they were using it for collateral, but like, if you just know basic finance and math, right? Like they had 8 billion or 7 billion of assets versus like of FTT assets. And then never mind the other Solana coins. And then they had, $6, $7, $8 billion of liabilities. And we didn't know what those were denominated in, but like of your net equity, you have 90% of it in an exchange token where there are no natural buyers. So the question for me was, and I had I figured out this answer a few days before, and it was sort of a horrifying realization. But the question was, who is the counterparty? And I was poking around, asking some people in the know, because, just knowing some people in this industry, like, is your desk borrowing, pledging, like allowing FTX to pledge or Alameda to pledge FTT collateral? Like, who in their right mind would do this? Like Genesis, like I heard it was Genesis, and then I was like, no, it's not them, with beyond a reasonable doubt. And I was kept poking around, and the realization that after Caroline's tweet of like, hey CZ, we'll buy all your FTT for $22, the realization was, why would they be interested in defending this mark-to-market price? Like, no, and it was crazy that no one like, especially the crypto Twitter.
That was
like,
an obvious desperation tweet when Caroline.
Like, it was literally like Do Kwon was like, steady lads, like we're like, why would you be interested? Like
talk about one of the all-time dumb tweets though. Here's my
dumbest
price floor that's going to blow up everything.
And dude, it was so.
And you
so
saw
funny.
them defending it on the chart too. They tried to
see it.
And the thing that was amazing. So when Luna was collapsing, I was on a plane from Mexico across to Portugal, and as I was getting on the plane, it was through Canada, right? So my leg to Canada, we got to see the Luna price like breaking down below like the 98-cent level on like the 1 minute chart. So we're watching this thing as we take off. And then you get to Canada, it was down to like 60 cents. And then by the time I was in Portugal, it was like, a fraction of a penny. But the way that FTT managed to achieve the exact same result in, I would argue, shorter time is just remarkable. It doesn't even have a minting mechanism. It's just wild.
Yeah, it was like, all right, these guys are defending this, and I don't have any interest in keeping up with any of these shitcoins, only if I think it's relevant to the Bitcoin market. And I pull up FTT's chart, and I've been doing this recently. I really like looking for whether it's shitcoins or Bitcoin or equities. I like looking at like volume profiles. You can kind of like, and you can do this with on-chain data too, which I think is valuable. But just looking at like where have coins traded hands, and I look and I just laugh to myself because under $22, there's not even 10 FTT tokens that have changed hands, or
it was basically minted at $20.
It was basically right, and it was obvious that they spammed it up. And then
do you remember, Dylan? It was back in the whole DeFi summer thing on Ethereum. I don't know if you were following this, but there was this protocol called Cream Finance. Yeah. So this Cream Finance thing spins up, and the whole argument for why you would use this thing is you could deposit literally anything as collateral. So what did Alameda do? Within like a couple of days, this brand new shitcoin casino spinning up. They stick a bunch of the FTT tokens in there, and then they short the YFI token, which has also been pretty much down only. And it's just a great example of just like printing free money, maintaining a price somewhere else, using it as collateral, and then trading on some other venue. It's just crazy.
Yeah, it was actually I wasn't paying much attention to that during DeFi summer, but Brad Mills brought that up before, like a couple of days before they collapsed. We're talking about it, and I was like, "There's no way these guys are that dumb to lever against it." And he's like, "Dude, no, they did this during DeFi summer. They went on, they took like however much FTT they had, and there was no market for it other than FTX, and no one held any supply except them, and they leveraged it as collateral, and were just shorting just garbage." And that was for me. I was like, "Oh wow." And I'm looking at the difference between like the Binance rate and the FTX rate for FTT, and I just see like a huge disparity forming like at this $22. Like it was obvious that Alameda or someone FTX was defending, and it was like, okay, even if these guys aren't bluffing and they have 500 million liquid, and I was surprised that the crypto derivative like cartoon character traders couldn't understand this reality. Because even if Caroline has 500 million liquid to literally just OTC buy CZ's stake, or to just buy, just to defend in the spot market. This is like an emerging market currency crisis where like you have perpetual swaps on FTX and Binance, where I can take $10 and short sell $100 of FTT. And you saw the open interest exploding. And right when 22 fell, I was watching the minute chart for most of the day. It was, quite a waste of time, but I saw 22 fall and it gaps to like 19, 18, 17, whatever it was. And I look at these like open interest derivatives or whatever, and I see like it was $100 million of open interest on FTX just get wiped, and that for me held the spaces, and we published it to our newsletter. It was like they're leveraged against their token. Like this is the counterparty here is not another. This is the solvency of FTX itself, and it's tragic. Like a bunch of people lost their money. Ironically, some people were shorting FTT on FTX, which is like,
yeah, they all got fucked.
Like, giga brain move. But I mean, regardless, I don't give a shit about any of these stupid Ponzi's. It's just like,
it was a straight Ponzi scheme. Like FTT was a straight Ponzi scheme.
Yeah. And like, all the Solana ecosystem, it was crazy. Cause like everybody thought these guys were like, so like proprietary quant trading firms and whatever. And in reality, they were just like, the biggest whales in the room that were using, they probably, I would say, were using FTT, Solana, Oxy, and whatever as collateral, and just bully market making on FTX for all of 2021. And who knows when they sustain the losses.
It was Shitcoin 2.0. Like they took the ICO model and then they just added a full stack exchange on top of it where they could trade and borrow against their own token and their users on the exchange.
Yeah. And with all of that edge, they still lost. It's just fucking wild. Like, how the hell do you do that shit at trading? Yeah, it's
also,
leverage,
like CZ,
right?
I mean, CZ straight up killed them, right? Like CZ smelled blood in water. I mean, this all started with the CoinDesk article where it like leaked Alameda's positions and like that they had a lot of leverage on top of their FTT. And I'm pretty sure like CZ was connected to that leak. And then he went for the kill shot publicly. He needed like cover. It was like a false flag article.
Yeah, I mean, and even if it wasn't right, he you can see that he's a pretty skilled operator. He saw the opportunity and he took it. And like whatever story you want to believe, right? That he kind of knew beforehand, or even if he didn't, and he was just kind of saying, "Well, get me out of this token." In either way, he didn't want to hold the FTT, and we saw how that played out.
I mean, they really, yeah. Yeah, they
I think it was the
underestimated
speed that
CZ.
shocked people, right? The speed at which everything went from, it's all fine, and there's every influencer on Twitter saying, oh, I think there's a 0% chance that FTX is insolvent, to the whole thing is a complete house of cards, and actually it's worse than that. It's completely fraudulent. Like the rate of change was just unbelievable.
Michael Jasonek said they did not lose. They laundered billions into the shadow government. It's naive to think they lost the money. I think there's some merit there, right? Like maybe it wasn't just a political money laundering operation. I mean, I don't think it was, but it's like, how did FTX lose all this money? Well, it's like, well, they they lost all this money because it wasn't all just trading losses, which I no doubt, given
it was transferred.
Yeah, it was transferred, right? And because of that mark-to-market collateral and leverage, they were solvent on a mark-to-market basis. And they could never realize that those gains. They could never mark-to-market that solvency. But they could.
I mean,
it's known for a while.
It's known that I mean, Sam was the second largest political donor. Like a lot of this money did go into corrupt politicians. But I mean, Sam also did not, Sam and his crew, Gary Wang and Caroline and whatnot, like they were not planning on blowing up. Like if CZ hadn't taken that kill shot, like they thought they could survive. And I mean, they were a way bigger threat to Bitcoin in general and Bitcoiners in general if they survived this downturn. I find it hard to believe that they intended to die. They just were not humble shitcoiners, and they got greedy, and someone called their bluff that had a bigger bag than them, and took them out.
Matt, do you think I know Marty loves these rabbit holes, and I didn't listen to the rabbit hole recaps you guys did post FTX collapse.
No, they've been intense.
I imagine. Do you think like I mean, I 100% agree. And the best thing is that Marty was tweeting this stuff 6 months ago, a year ago, like FTX is an attack on Bitcoin, etc.
Yeah.
Do you think that this whole thing was like, funded, or, there maybe like there was 3-letter agencies involved, or is it just like incompetence, greed, and, a feedback loop of ignorance that just imploded?
I think there was heavy corruption, as to be expected, and I think Sam was a product of like elite American culture and had a lot of good connections. But I think, mostly he was a fiat maximalist shitcoiner who was never really a Bitcoiner, who came in and was playing the shitcoin 2.0 game. I mean, look, we've seen Vitalik and them play a similar game, right? With lobbying and paying people off. So, I mean, it blowing up is definitely not an effective attack on Bitcoin. If anything, it's the single most bullish thing I've seen in Bitcoin in a long time. I mean, it sucks for the people who lost money. But them blowing up is not an effective attack on Bitcoin. Them surviving would have been an effective attack on Bitcoin. I mean, I think they were trading paper Bitcoin, right? Like I think a lot of exchanges are trading paper Bitcoin, and some of them are still working today. I mean, KuCoin has the yield in KuCoin deposits is like over 100%.
Totally legit.
Which they're like trying to encourage people to deposit in a bank run scenario is why that quote unquote yield is so high, right?
And so when you think about it, right? So it's nice to have this forest fire, because we've all been talking about, the risks of yield and, you are the yield and leverage and paper Bitcoin and, perp swaps and all this kind of thing. At some point in time, this whole event was going to happen, right? Whether the pin was by fraud or the pin was by just a major scale deleveraging event. In either way, we've essentially had the absolute peak maximum flush out you could possibly ask for, right? It has removed not only like the leverage. It's one thing to remove the leverage. It's another thing to remove the venues that offer the leverage. So yeah, I agree, man. I think it really is one of the most bullish things for Bitcoin in a very, very long time. It's painful, but this is what a free market does, right? It expels the bad actors. There's no bailouts coming here, and Bitcoin continues to tick on, right? New block, and we've essentially removed an extraordinary amount of the malfeasance from this space, and woken up a whole new class of Bitcoiners who are aware of it and know what to do now.
100%. I mean, to me, the jump in the theory is the deep state started FTX. There's no doubt in my mind that there's heavy corruption in the American government. Like, I've talked about this frequently. This is one of the reasons why I love Bitcoin. It's one of the reasons I like the greater open source movement. It's one of the reasons Dispatch exists in the first place, because we can't trust any of these motherfuckers. But I just, if you want to talk about the deep state attacking Bitcoin, they've been very effective with their KYC rolling out to every single on-ramp and off-ramp. There are very effective attacks. You want to talk about the deep state? Well, maybe they're involved in the U.S. mining industry now, right? We have large public miners. They're very easy to regulate. They're very easy to pull the trigger on. To me, FTX is a story of shitcoiners doing shitcoin things, fiat maximalists that's elite doing fiat maximalist elite things, and playing games, right? And a lot of politicians are caught up in that. Probably a lot of, agency folks or whatever you want to call them are also caught up in it. But for it to be like a thought out plan to attack Bitcoin is to me is a reach and requires some more evidence on that front. It's just an easy thing to say, like, oh, this is the attack on Bitcoin we've been waiting for. I think the attacks are way more insidious than this. This is just, I mean, and like one of the main pieces of evidence is like SBF is not in jail yet. Well, like, name me a shitcoin scammer that's in jail.
Yeah,
I mean,
are they all in on it?
There's crime happening everywhere, and people aren't in jail.
Is Machinsky and
Wild.
Celsius part of a deep state operation? Right? Like, are the EOS guys, Brendan Bloomer and stuff, who have 150,000 Bitcoin, are they also part of the deep state operation? Like, most shitcoiners don't go to jail. That's the reality of the situation.
People didn't go to jail after 2008. So
exactly,
it's all the same thing.
On that note, though, I mean, Dylan, I've seen you've been tweeting about BNB. I've seen you've been tweeting about Nexo, about KuCoin. I think you've been tweeting about DCG. DCG has been in my crosshairs for a while. I find it really hard to believe that we don't see more of these fiat institutions kind of crumble before this cycle's over. What are you guys thinking here?
Did you just see? This is pretty ironic. I guess this came out an hour or so ago, but I mean, we could kind of see it coming. So DCG owns all these subsidiaries or whatever. They're looking to dish CoinDesk to raise funds, and it's kind of ironic because CoinDesk leaked they
broke the story that broke DCG.
They're going to sell CoinDesk to cover their losses as a result of reporting by CoinDesk.
One of the approaches suggested a $300 million purchase price, but it was considered too low. Some of the people said CoinDesk was making about $50 million in annual revenue from a mix of traditional online advertising and its popular consensus conference. Well, that is a laughable valuation, in my opinion. And yeah,
however,
I mean, talk about,
you're a forced seller. You need the money. This is the pain, right? The sharks are in the water. They know that they have to raise money, and they'll pay bargain bottom price because you need it. It's not about what you want to sell, what you have to sell.
I mean,
money's tight right now. Leverage. It's not just Bitcoin. Like, the
Everyone.
Fed tightened, and now everyone, like, Dylan knows because me and him are good friends, that like I was giving him shit privately about all the Fed tea leaf stuff. Like, this is what the Fed wanted, right? They wanted all the fiat companies to blow up, not necessarily in Bitcoin as well. I mean, it's a minor part of it, right? But money's tight. DCG was able to survive all these years because they had easy access to cheap external capital. They don't have that right now. If you're trying to raise in this environment, it's pure desperation.
Well, and this is like this is a dumb thing about, and I mean, purge it all, right? Like all this mark to market leverage against a liquid collateral needs to, and it has for the most part blown up. But like DCG, you know, or Genesis, right, is lending to Three Arrows Capital. Like I think Bitcoin collateralized lending is going to be a very, very vibrant and healthy eventually ecosystem, especially when Bitcoin's volatility or realized volatility falls a tremendous amount. And even now, like you don't have to, as long as you over collateralize, right? Bitcoin trades 24/7, 365 across jurisdictions. It's not liquid in
even if
absolute
Bitcoin
terms.
dumps, you can sell the collateral and cover yourself.
And so in theory, like Bitcoin collateralized leverage, like the fact that you can get, you know, for a mortgage, I mean, it's not 2% anymore, but it used to be 2-3% in the US. You tell me a house is easier to liquidate, right? It's not. And now it's like 7, right? So, but regardless, I think Bitcoin collateral is a pretty tremendous thing. It's fungible, it's portable. You guys know all these things. But the crazy thing was that, you know, Three Arrows Capital is pledging fucking Axie Infinity and AVAX and GBTC as collateral. And these things, it's like there's no liquidity, right? So Genesis and BlockFi take massive losses. And then what happens, right? DCG, who's a buyer of GBTC at the top because they're trying to arb the discount keeps going lower and lower and lower. And Grayscale comes out just like a week ago and says, no, don't worry, we were hedged. Yeah, you can hedge the Bitcoin exchange rate. Like you can, whether it's through Genesis shorting, and ironically, it might have been shorting on FTX, or, you know, some swaps. Like you can hedge the Bitcoin discount. So these guys were plowing money with leverage, because they tapped a $600 million credit line in November of 2021. They were buying GBTC to try to close this discount. Three Arrows Capital blows up. They're forced seller of a massive amount of GBTC. The discount goes lower, right? And so then Genesis blows up.
Bought.
Yeah, well, DCG it's a subsidiary, right? Genesis blows up
because Genesis is a subsidiary of DCG. Yeah.
Yeah. Sorry, I misspoke there.
You're good.
Genesis blows up because they're freaking, you know, touching the perpetual motion machine that is Luna and 3AC and doing all that stupidness. Like they swapped $1.5 billion of Bitcoin for UST, and who knows how much they took on that hit, right? Like there's no way they got out unscathed from that UST mess. And DCG bails them out.
That's insane. They took. I saw that as well. They took $1.5 billion worth of the Terra stable, quote unquote, stable coin that went to zero.
Yeah,
it's wild because so the reason I never looked into Luna is there was this other project way back in the day called Haven, which is like a fork of Monero, and they're the same thing.
I remember Haven.
So basically the concept is that you burn tokens to go from the stable coin into the thing. And I was like, well, that is great, but what happens in a bear market? Just not even from a Ponzi scheme perspective, but in a bear market, if you know that your stable version of it is going to be buying more of the token at the bottom, even if you want to buy the dip, you would wait as long as possible. And then you apply that across everyone. And as soon as you know that, when people go to swap back, the token supply is going to go to infinite. And it's like, well, this whole thing is just going to go to shit in a bear market. So when Luna came along and I saw that mechanism, I just never looked into it. But, you know, next minute, the thing's 40 billion and you've got DCG taking $1 billion worth of the thing. It's just wild. How do people not do this due diligence?
Well, yeah, I think that's the thing is like, there's a whole bunch of people that were, whether it's like, you know, Genesis or Barry or, you know, Suzu and Kyle Davies or Almeida and SBF. It's like all these smartest people in the room, right? Like, what were they doing? It's like, well, the smartest people in the room during an up-only bull market were just the most degenerate, leveraged, liquid shitcoiners. I mean, it was just it's all one trade, right? Like, I mean, fundamentally, like when I say it's all one trade, I don't mean that like that shitcoins are you know, the same as Bitcoin, but more so like they ride that same liquidity tide, and to an extent, Bitcoin rides the liquidity tide of legacy markets in a way. It's baited to that to a certain extent. And so these guys, right, like Barry, right, supposedly, like, I mean, I don't doubt Barry's a smart businessman, right? He's doing something right to be in this position. but Barry was buying hundreds of millions of dollars of Zcash at the top and like promoting it, right? So
Barry's
tell
a
me,
fucking idiot.
so what's that doing, right? So how's that going? And he's wrecked. And so like Genesis is fucked, and they borrowed a whole bunch of money.
Barry and DCG were in the perfect position. They were just minting fucking management fees on GBTC, and they got extremely greedy and extremely reckless, and they refused to blame themselves on it. They say this is an ordinary course of business. We saw the same thing with BlockFi. They were like, we couldn't have seen it coming. Like FTX, it's all FTX's fault. Like they were insolvent before FTX, quote unquote, saved them. Like Bitcoin is a movement of personal responsibility. Users have to take personal responsibility, but that goes for the operators too. Like these guys built this fucking dumpster fire themselves, and now they have to sleep in it.
It's amazing how GBTC is. It's like you can really track it back, and there's a lot of people who've made I think, a very credible claim that the fact that GBTC existed in its current format, where it's not an ETF, it's a closed-end fund, you cannot get the redemption on the other side to arb the peg back. That's essentially been the widowmaker of this cycle, because all of these positions were baked into the fact that, and also just the bull run, right? A huge chunk of the bull run back in January, February 2021 was a result of people buying 600,000 BTC and dumping it into GBTC to arb down the premium. And there just wasn't the demand to sustain that. And then all of the pegs blew out. Well, it's not really a peg. It's a free-floating asset, really. And, that was kind of the end of all these different trades, right? People levered up. People assumed that this thing was going to go back to a zero discount. And it just didn't. And it keeps getting worse and worse and worse. And that really, at the center of this whole thing, was the kind of the cancerous lump that mutated into everything around it. And you're right, greed and just the ability to print shit coins, and it's nasty. But it does feel cleansing to see it all get flushed out. That's for sure.
Yeah, I mean, can you imagine fumbling that bag, right? I mean, they're going to hold on to, and the reason that DCG is trying to sell CoinDesk is because they want to keep Grayscale as much as possible. Grayscale right now, every single day, prints 30 Bitcoin in fees. 30 Bitcoin. They have 635,000 Bitcoin. They sell 2% of that divided by 365 a day.
Well, they print more than that, right? Because they have all their shitcoin closed-end funds too.
Yeah, true. Right?
They have the ETH one and the Zcash one and the Ethereum Classic one.
It's insanity. And to think that they might not make it to their side, or might have to sell this or sell that. It's like, they definitely did not stay humble. Well, a bunch of degenerates in this space, that's for sure.
Tale as old as time, but this time the scale was way higher. Like in absolute terms, it's way bigger. So does Binance survive this cycle? I
think it does. I think a lot of people poke at CZ, and again, I don't have any inside baseball here, but in terms of Binance, like all their wallets and things, and again, like without any kind of inside knowledge, when I go back and just look at and reflect on my experience poking around exchange balances, just seeing how these operators work. How when you spend enough time with any kind of, whether it's data or whatever it is that you do, you just develop a bit of a intuition, right? And you kind of you get a bit of a gut feel of things. Binance's exchange balances have never been hard to track, right? They're actually quite transparent. And they've pretty much been up only, and they've got an enormous amount of coin on them, and continues to grow. So, when I kind of go back and just rummage around in memories and try and work out if I've seen, I mean, obviously Binance is in the same offshore type condition. So regulatory, probably still a big risk. When I see him moving to his own BUSD token, which I think has Paxos or something on the back end of it, that to me looks like he's de-risking. I saw a question in the comments here about, is Tether going to blow up? Well, I mean, if Tether was to blow up, CZ is currently doing a whole lot of behaviors that would signify he's de-risking his own exchange from that tail risk. So when I look at what Binance is doing, BNB, as much as it's a shitcoin, right? It also is, if you kind of just take a very objective view at things, it's the exchange token of the largest exchange in the industry, doing something like 80% of the total trade volume in this market, which is wild, by the way. It's
Yeah, they
also
were doing
built
like 50 before
their
FTX
feelers
collapsed,
trading.
and they grew up.
Yeah, and then they did their feelers trading and all that kind of stuff. So when you kind of look at it, it's essentially the equity token, right, in inverted commas, of the largest exchange, which
Not actual
continues to
equity.
print money. Not actual equity. Continues to just print users, and not only that, it built another shitcoin casino off the back end of it, which is the Binance Smart Chain, right? Which was, I think a lot of people miss how big that was during the bull market. That was where you come rockets and all those wild tokens were trading. That's what the people wanted, right? So Binance built the world's greatest casino of all time, and then also put a chain hanging off it. So at the very least, the BNB token has a hell of a lot more use case, again inverted commas, than FTT did on a relative scale. So look, I don't know the future, but at the moment, I'm yet to see anything too scary about Binance. There's nothing that's got me immediately concerned. It's still, I mean, again, you've got to take take it as it stands. He's still running a casino that is outside US regulations. Probably isn't going to be on the right side of regulations as they come out. Has a whole bunch of their own token, which there's securities laws and all that kind of thing in there. So look, it's certainly not risk free. As with all the custodians, I certainly wouldn't leave my keys with anyone else. But
Yeah, not your keys, not your coins.
not your keys, not your coins. But my relative probability for Binance imploding is not enormous.
Yeah, I agree. I mean, I don't think it's a high probability. What I do think, and I've tweeted a bit about this the last 2 days, and certainly being skeptical, and maybe I'm just jaded from the last 9 months. Like that's certainly totally possible. Or jaded, or paranoid, or skeptical, or all three. But when I just think about this is not even about CZ or Binance, but the CZ somewhat seems to be running. And I mean, I guess it's logical. He's just trying to take market share, but like, it's almost like he's running like the SBF playbook of like sticking out his chest and saying, "Hey, we're going to bail everyone out. And, we're going to raise for an industry recovery fund." When 6 months ago, he said, when SBF was bailing everybody out, he goes, "I don't see the need to bail out any of these actors. Let the free market work." And now he's saying, "Hey, we're going to raise $1 billion." He tweets out 3 days after FTX implodes, "Hey, if you see any exchange like manipulating coins or moving coins before a proof of reserve, that's shady." And then he moves some coins and goes, "Oh, don't worry, guys. This is just our auditor wants to see this." The previous auditor, we don't know the auditor now, but the previous auditor was the same firm that audited FTX. Their firm is located in the metaverse, as per LinkedIn. You had Brian Brooks join, the former U.S. comptroller of the currency, become the CEO of Binance for 2.5 months, and then just left.
And former Coinbase too.
Former Coinbase, like chief legal or compliance or something, right?
That one is concerning.
When like, why did Brian Brooks leave?
That one is a bit of a concern, yes.
And so Cooley too, right?
Cooley
was Cooley Binance US as well. What's
her
name?
I think
Catherine Cooley. She's ex-regulator that was Binance US for a little bit.
And it's just like the reason that, think about this, like the reason that, and it makes sense from the US regulator perspective, but the reason that FTX.com and Binance.com needed to be FTX US and Binance US is because whether the regulators even got to look at their books or not, there's no way in hell you're standing up this exchange here. You need to make a different entity. Right. You used to be able to go on FTX US or FTX.com as a US citizen and use it, but you just couldn't access the perps and all of the leverage tokens and whatever. Then they just stood up an entirely new, different entity, different domain, which I guess was basically the same, just with a different UX. Regardless, the couple things I listed, and also just kind of CZ like sticking out his chest. I don't know. Like I also have a hard time believing, this is my last point here on the Binance thing, and I'm not trying to FUD anything. Like I don't think these guys are I don't think these guys are.
Not your keys, not your coins is not FUD, period.
Yeah, yes, facts. And
I think
this is another
that.
Yeah, not your keys, not your coins. Also, I've questioned a bunch of exchanges, as a bunch of people have. The laughable thing to me is when people are like, "Oh, FUD." No, if your exchange is solvent, right? actually maybe one of the best things that could happen to your exchange, and from a reputational standpoint and from a trust standpoint and from a longevity standpoint, is if you get bank run and your operations work completely normal. And you go, everyone pulled their Bitcoin, their ETH, their USDC, their Tether, and everything was fine. We processed all withdrawals. There was not a problem. The only reason that you wouldn't want that is if you didn't have the coins that are running fractional reserve or et cetera. And so I don't think Binance is doing that. I mean, on chain, we can see they have freaking 600,000 Bitcoin. But when you mint a token out of thin air, I just think about incentives. This isn't even about CZ or Binance. When you mint a token out of thin air, and maybe CZ's been through multiple cycles, like we know he has. So maybe he didn't get caught up in the euphoria and all this. But they hold 50% of the BNB token, or at least they got 40% in the pre-sale, the ICO. BNB BTC has been up only. And if you look at the chart, and I posted kind of a mini thread on this today with some like volume profiles or whatever, the thing went up 9x on like no volume at the beginning of 2021. And that was during the whole DeFi craze, right? Like Check said, with all the, cake swap and all this other stuff. It was all built on the BSC, the Binance Smart Chain Casino, which uses BNB. But BNB BTC is up only. You have like all of the volume for BNB perpetual swaps is at the top. And when you have a token that you minted out of thin air that you say you've never used as collateral, but it was worth $50 billion at the top, right? So you're telling me like they never, ever once just in their own books natively borrowed against that? And I would say I have a hard time believing that. Maybe I'm just, again, jaded, skeptical, paranoid. Who knows? But would I be surprised if they were swimming naked? Would I be surprised if they leveraged against their own token, which you can do on their platform? And by the way, if you go on Binance, if you just look up BNB collateral, Binance, users can borrow against their BNB collateral. And BNB is only 50% down from the highs, right? Every shitcoin that served as beta for Bitcoin is down way, way more. BNB is not. And BNB on Binance, by the way, you can borrow against your assets and they subsidize the financing rate, right? So you can borrow basically like for extremely cheap, if not free on this platform using this collateral. And the fact that it is used as collateral and isn't serving as leverage bait on the downside gives me cause for concern. So who knows? This is not like I feel like I'm that Always Sunny in Philadelphia guy that's like ranting and kind of, just looks like a total kook. But like the asking questions in this industry has never gotten me to a place that I, has never served me wrong, right? Even if it doesn't come true or there's, I jump to the wrong conclusion. It has never hurt me to go through hypotheticals, because at this point, like literally nothing would surprise me. And that's why.
If you actually think about like, if there's ever a time for this shit to blow up, it's right now, because you've got the maximum amount of pain, the fewest number of counterparties to carry the bag, the most volume of impairment, like prices are down. It's the perfect time. And this is what bear markets do. Bear markets are forest fires that clear out all of the junk that gets accumulated over the course of the bull. And man, did we accumulate some junk this bull?
Yep. No, and I'm so here for it. So
we have Binance does. So we had this comment from Aaron Bax in the Matrix chat that Check mentioned briefly about Tether blowing up. I just want to say, first of all, I mean, Tether's a trusted third party that's actively breaking U.S. regulations. There's a massive amount of counterparty risk to hold Tether. A lot of us have been, expecting Tether to blow up for a long time, and I've been proven wrong. Do you guys think Tether survives this cycle?
I actually do. And so Tether's one of these cockroaches that just won't go down. And when you asked about Binance before, whether that's kind of the next domino, or is there any risk? I actually put Binance and Tether in the same bucket. And that is that all of the Tether truthers have been out there for years, are pointing at Tether being like, look at this scam, look at this Ponzi scheme, it's going to implode. And they're staring at this thing. Meanwhile, UST and Luna is blowing up behind them, which was an actual Ponzi scheme.
It was pretty fucked up, the USD thing, by the way. Like, I was talking to Dario from Moon Wallet, and he's Argentinian, and like a lot of the Argentinians got burned on Terra because they were like, oh, this is the decentralized version of Tether, and Tether is going to blow up, so I'll be in Terra instead, and they all got wrecked.
Yeah, that's what was so insidious about UST, is that it was promising stable coin, right? And that's you're right. The people that actually impacts the most are people who don't have the financial capacity to weather that stablecoin becoming unstable. So with Tether, I'm firmly of the opinion that if you go back and look through Tether's history and don't come out thinking that there was some malfeasance back in the day, there's rocks in your head. Like it is so bleedingly obvious that they have had to. And this is the other thing, right? You have to factor in that the US government has essentially put them in a position from the get go where they've had to do some pretty shady stuff to stay alive. And there's no question that if you go back further in history, you'll find things where Tether is shady as it gets. And there's probably no question that as a result of that, right, you don't just get over that. Even if they are fully backed at the moment, they've still got a history where they weren't, and trying to make your accounting books legitimate following a period where they weren't is tough business. So, look, I agree with you what you said, Matt, that there is an enormous amount of counterparty risk with Tether. I personally would never hold it. I don't think it makes sense to hold it. I understand why people do. A lot of people, and again, sadly, a lot of people in the third world, and I posted a tweet on yours the other day, Dylan, when you mentioned something about treasuries. And I see this quite a lot, particularly in the finance world, which is obviously American-centric. It comes as a shock to a lot of people that most of the world isn't American. So when we start talking about like why do people hold Tether, well, it's because they don't have US dollars. Like I'm an Australian and it's really hard for me to get US dollars. It's easier for me to
This
get
is,
Bitcoin than
yeah.
US dollars.
This is what people don't realize about Tether. Like Tether was born because first of all, it was hard for Bitcoin companies and exchanges to have banking relationships, but also it's hard for people to have access to US dollars. It's essentially a black market US dollar, which is also what people miss when they think like USDC or any of those regulated stablecoins is a competitor to Tether. Because the whole point of
Totally.
Tether is to end around US financial regulation of the dollar.
Absolutely. And you know, that's the thing.
It's
My only
inherently illegal.
interactions, exactly, my only interactions with Tether have been with people in the third world, right? People in the developing economy that literally do not have access to stable banking, and Tether is a lifeline for these people. So,
So
um,
I had Sergey a bit refill on last week, and the three most common payment methods on BitRefill, where you can buy gift cards and top up phone time uh, with cryptocurrencies, was Bitcoin was number one, Ethereum was number two, Tether on Tron was number three, and uh, Binance's like closed API payment system, Binance Pay, was like basically tied for third with Tether. So just
is
to
that right?
give people an example of actual like on the ground usage, um, basically Tether, Ethereum, the way he described it, if I recall correctly, is basically Bitcoin was at like 33% of payment volume on chain Bitcoin, and then like Ethereum, Tron, Tether on Tron, and the reason it's on Tron is because it's super cheap
Cheap.
transaction fees because it's centralized, and Binance Pay, which is their like centralized API payment platform, we're all basically a three-way tie at 17%.
Wow.
Very interesting. I didn't know about that Binance Pay, but that's the thing. You don't realize how
I had no
hard
idea
it
it
is.
existed.
Neither did I. But again, it's not a market that you and I need, right? That is a market that is serving people who simply don't have a bank account. And this is the thing, right? If you actually just take a very objective look at that, as much as there's probably some shady stuff at Binance as well, and you know they have a huge shitcoin casino and all the rest of it. These guys are offering banking services that no other Western organization has ever done to the largest cross section of people in the world, and it's one of those things that you kind of do have to just say, you know, tip your hat just a little bit because it's, you know, that's essentially
Like
what Bitcoin
respect the
is setting out to
hustle.
do. Respect the hustle and respect the motivation, right? He's going for cross section. He's going for size. And when I say size there, it's in people. And this is actually a stat that this one thing that Chain Analysis does very well is their reports about adoption. And I read it every single year. And the thing that always stands out to me is the per capita adoption of Bitcoin around the world. And you see that in the West, of course, we have more dollars invested. But when you look at per capita, it's like 30, 40, 50% in the developing world, right? You see these enormous numbers coming out of places like Nigeria and Indonesia. And that is actually what it's all about, right? You're giving people who have absolutely no other options an option for the first time in a long time. And that's powerful stuff.
But Bitcoin's the only one that doesn't have counterparty risk when you hold it yourself.
Indeed. So, and that's, I mean, that's an interesting topic, and one that I haven't really got to the bottom of is I do fall into the camp because I kind of run the ball forward and say, how does the world look in 15, 20, 50 years? And I do think the most probable scenario is that fiat currencies probably aren't going anywhere anytime soon. They're definitely going to devalue over time. Yeah, no, look, there's what I think should happen and what I want to happen, and then there's what I think is most likely, right? So they're two different things. So I do believe that Bitcoin could be the answer, all right, singularly, but I don't believe that the governments are going to let it go of the ability to print shitcoins anytime soon. So as a result, we're going to live in a world where it's Bitcoin and US dollars or fiat currency. I'm also of the opinion that something like a USDC is going to be blessed by the state because it's essentially a CBDC that's already built, right? Now they've got the architecture for it. So I think that's a highly probable scenario. And then the next question is, okay, well, we know that the Oracle problem will always exist, right? So how do you create fiat liquidity that is backed by Bitcoin, or at least can cover the counterparty risk to the same extent as Tether? So Tether, I think, is probably going to be in the shotgun of the law. I struggle to believe that the US government is going to allow them to tick along for too much longer. But again, we've been saying that forever. But I've been trying to work out what the next phase is, where you actually have some kind of, I don't want to say decentralized, but minimized counterparty risk, stable coin or stable asset. The problem is that the Oracle problem is just unsolved. So you can never get the price feed into this thing. But that's certainly it's an area of interest. I'm skeptical it can be solved. I don't believe in these algo stable coins. I think that's crock shit. But collateralized with Bitcoin, and Bitcoin that's not, wrapped Bitcoin, like actual Bitcoin, that can be trustlessly redeemed on main chain, something that can fit that brief would be just an unbelievable piece of infrastructure. And the only thing that I've ever thought of that has any potential about that is, even though the perpetual swaps have their problems, the idea you can go a 1x short on Bitcoin and that essentially locks in a $1 exchange rate. I've often wondered whether there's something out there that can be built that essentially is that 1x short.
Isn't that like
the Galloy Money's doing,
Galloy.
stable sats or whatever?
But they're trusting this is the problem. Galloy Money, I think it's like an El Salvador project, right?
Yeah, Bitcoin Beach. So they were the ones behind Bitcoin Beach Wallet, but
so
I think they're American.
They short Bitcoin, I believe, on OKEx. Bitcoin collateralized perpetual swaps, and so it's like $1 with a variable
counterparty risk of the exchange.
But I think this is the golden goose for Bitcoin, and we'll see if it can be built in a decentralized way. But if we can get sort of a trustless, and this is the big thing, is that how do you? Yeah, it's you
maybe
really can't,
minimized,
right?
Maybe trust minimized. I think what happens out of this, or maybe it doesn't happen out of this cycle, maybe it happens out of next cycle, is that people start to realize that the only real stablecoin are sats. And when I say that, I mean it's because it's a very strong foundation. You don't have counterparty risk. Like, your asset is not going to go to zero. It's not saying that there will not be volatility. There will be volatility. But we're in a world where trust is quickly fading in institutions. We're in a world where, on a geopolitical landscape, countries don't trust each other in terms of trading. And all of a sudden, we have this asset. We have sats that don't require any trust, that don't require any counterparty risk if you hold them yourself, if you use your own node.
And I think we also forget that
people don't realize that yet. Most people do not.
We also forget that the fiat only is the fiat only regime is actually the break from the norm. The norm is a gold standard, right? So, and none of us have lived in that, right? Or very few people have lived in that true gold standard for decades. So there's this kind of lapse in human memory of the fact that you can actually have gold coins and sound money that works and has worked for most of human history. But I think Jeff Booth says it best. We're trying to measure the new system from within the current system, and you can't wrap your head around it, which is what makes it such a chaotic transition. So there is still I'm certainly not in the camp where I'm going to assign a 0% probability to a Bitcoin only world, because we've seen sound money standards in the past, and it's the best sound money that's ever existed. So you would expect there to be at least a meaningful gravity back towards it.
Well, I think there'll always be shitcoins. I mean, you can create a shitcoin without permission, so people love to gamble.
I can't even imagine the Ponzi's and I think it's going to happen, unfortunately, because Bitcoin is this permissionless thing that's accruing value and monetizing on balance sheets across the world. But we saw Plus Token, and obviously the ICOs weren't really on Bitcoin, but the 2017 era, you used Bitcoin to onboard onto these exchanges. The next cycle, and it'll be fueled by Bitcoin native adoption, by the hodlers and stackers of last resort setting the floor, by hash rate going up only, and Bitcoin's synergy with the energy markets. These are the things that fuel the adoption, fuel the appreciation of Bitcoin, and then layer on top of it degenerate amounts of leverage that can persist and fester under the surface for a while. But the amount of nation state level Ponzi's that we probably get over the next 10 years is going to be, just imagine, right? Bitcoin to attend, and this is why I kind of revised my thinking of that volatility might during this bull run. It was is Bitcoin ever going to drop 30%, 50%, 60%, 70% from the highs? And then it was oh, of course we're going to, because, and I guess hindsight is 2020, maybe next time.
Yeah. All the super cycle people have.
Yeah. The super cycle, right?
High on their face.
And funny enough, it's almost like a paradox in a way, because everybody that thought that levered to the tits, and then that's reason
what happens
why.
Every cycle, bro. It happens every cycle. People at the top think it's never gonna go back down. This time is different, and they get fucking wrecked.
The thing that actually amazed me about this whole cycle is how much it was exactly the same as every other cycle. Right, people were saying that there was no 4-year cycle, and then here we are. People were saying that miners weren't going to, they're publicly traded now, they have access to capital, they're not going to capitulate. Well, how's that going for you now? It's amazing how absolutely the one meme that was supposed to die was that Bitcoin was going to go through no more 4-year cycles. That was the only meme that persisted. Every other narrative got killed, but Bitcoin, being the 4-year heartbeat, continues to tick on, which I thought was just a really fascinating. No one expected it, because it's not a very exciting meme, right? The concept that the cycle just keeps going up and down, and we get these booms and busts. It's almost so predictable that it's boring, but within that whole framework, people don't realize that all the chaos comes from leverage. It comes. There's been leverage in previous cycles. It just didn't happen to be literally borrowing fiat. It was closer to printing ICOs and all that kind of shit. So it's just very interesting that the 4-year cycle is back and kicking, and it's the one thing that survived the test of time.
Agreed. It's a great way to put it. And I often wonder, and when you say Bitcoin or Sats are the stable coin, and Bitcoin as a system, as a network, is just this steady heartbeat. And the only thing that's changing is our perception of it, and the way that humans interact with it, both the exchange rate and Bitcoin is just this intangible, decentralized ledger, and the price chart is just a bunch of humans interpreting it as a different way. Bitcoin's at $16,000 right now, and it's dead. But Bitcoin, the
price chart is literally the only volatile part of Bitcoin.
Yeah,
and that's just the connection to the fiat world.
Yeah, it's. I despite as much as I've done my best to study financial history and market psychology and And I mean that part of it served me well, but going through it for the first real time, both from like an economic cycle, like what we're going through right now with, this downturn and a tightening cycle, but also like the Bitcoin.
Well, Bitcoin's never had a recession before.
Yeah. So
Besides,
it's
I mean, if you want to count March 2020, but that was more of a shock.
The scam dump. Yeah. No, it's certainly interesting just to kind of live through it. And I mean, I like to tell myself that next cycle I'll be prepared for the madness, but who knows what happens.
You won't be. You're going to go all caps at the top.
Yeah.
To be fair, I went all caps before the top and then continued. But
yeah, I believe 200K by conference day. By the way, nice.
We would have had it. We would have had it if SBF wasn't selling paper Bitcoin.
Yeah.
Well, that's the thing. I am increasingly coming around to that concept that the amount of paper Bitcoin this cycle, and Dylan, you've probably seen this as well. There was something that happened. The actual peak for Bitcoin was January 2021, just before Elon bought BTC. That point was actually across every single metric that I look at was the top, right? In terms of like where the momentum's died down, where everything started to decay, which is kind of wild, right? So I'm firmly of the opinion that the bear market started in May 2021. And then the pump back up to the November and October high never had the juice behind it. On-chain activity was down, profitability was down. There was all sorts of reasons why that was just a scam pump, which is kind of interesting. But the peak in exuberance, so to speak, the impulse started to die off from February onwards, 2021. So that was actually where we saw that euphoric move. And interestingly, I don't know whether it's got something to do with it, but obviously Elon stepping in. I don't know whether that kind of triggered the Doge maneuver, right? People started moving into, further down the risk curve, and then everything just went completely ballistic, plus all the paper BTC. And at that point in time, you obviously got the GBTC trade. So people are buying Bitcoin and sticking it into GBTC, re-levering up those GBTC shares. They're basically saying, well, I've already got my Bitcoin allocation because it's the collateral within this paper. I'm then going to use that collateral to go and borrow and spend into the shitcoin universe. And I'm pretty sure that was the overall cycle. We saw Bitcoin do its thing and go through a monetization rally. By the course of January, it was pretty much cooling down. People were starting to lever up. We then got our first futures-driven liquidation in May 2021. Then we had potentially with Alameda's assistance, but certainly a bunch of paper Bitcoin that pushed the market up to the all-time high, but it didn't have any true fundamentals behind it. And then 2022 is basically just being the deleveraging coming off the back of that. So, and also, I saw this come in, this BTCD, when it comes to Bitcoin dominance, do not use the one on TradingView for two reasons. One, it includes all of the market caps of shitcoins, which like FTT can be propped up by a single market maker. I could print Checkcoin tomorrow and keep the price at $100 trillion because that's the price that I valued it at. And the market cap on CoinMarketCap that BTCD is calculated from will go down, right? So don't use BTCD for that reason. The second one is that it includes stablecoins. And I don't think that we should be including stablecoins in the market cap because they're essentially fiat. If you want to do that, then Bitcoin dominance is like a fraction of 1% because you've got to compare it to the US dollar.
I don't think dominance is just relevant in general.
Well, there is one version of dominance that is relevant, and that is the realized cap. So if you look at it's not perfect, but it's a hell of a lot better. So what the realized cap is, it's the on-chain market cap. Value every coin at the price when it last transacted. So what that does really nicely is all of the coins from the Ethereum ICO that haven't been spent or were lost or whatever else, those are not valued at the current price. They're valued at zero or the fractions of percent. Exactly.
Yeah.
Same for Ripple, right? You look at Ripple, all the coins that are held by Ripple itself, the founders, they're worth zero because they haven't transacted. They haven't dumped them yet. So what you're doing there is you're actually valuing coins at the price in which they transacted. If you want to do it even more precisely, it has to be the price where they actually were sold and bought. But what you can do if you do that dominance, you see that basically it's Bitcoin at 66% last I looked. Ethereum's has expanded its market share, has basically been flat for the entirety of the 2021-22 cycle. in terms of dominance, and everything else is basically going to zero. So you've essentially got two assets there. Stable coins you can remove out of it, but a realized cap dominance. BTCD is complete shit. Don't use it.
Fair enough.
Is that a Glassnode metric check?
It's not, because we don't support enough shitcoins to make them.
Got it.
So where do you track that? Coinmetrics?
You can build it. Yeah, you can build it on the Coinmetrics network data system. And to be honest, it's one of those things where, like, you could add every coin, but once you've done it for the top like 20, most of their realized caps go to zero anyway. So it's you kind of get the Pareto distribution going.
So I mean, well, first of all, before we go to my next tangent, you guys said that you don't expect very clear, not your keys, not your coins. Everyone should self custody. You don't expect Binance to blow up this cycle. You don't expect Tether to blow up this cycle. Who's going to blow up this cycle? We're not
Ethereum,
done yet, right? Ethereum.
No, I mean, I think there's.
Well, they all can't withdraw their staked coins right now, so that might be delayed a little bit.
I think we'd have more. We just have more to deflate in the shitcoin space. Like Ethereum trading at $1,200 or whatever it is. Like there's still like, I think there's like $500 million of like staked ETH liquidations on chain or whatever. You know what I mean? Like stuff like that. Like, and who knows? Like we could just, this could be the bottom, and that's any remaining leverage, whether it's DeFi or who knows how much opaque leverage is still in the system. I would say there's probably not all that much, but certainly some of these miners are going to go down. They don't have all that much Bitcoin to sell. But like, I just think that because of the economic conditions deteriorating, because we do have marginal buyers, like with the sat stackers and can set the floor, but a lot of these shit coins, right? Like FTT had nothing to do with Bitcoin, but it imploded. And the whole system is cross-collateralized, so Bitcoin's exchange rate fell.
They have Bitcoin as collateral, and then they sell the Bitcoin because it's the most sellable asset that's actually liquid.
And so, like, if Ethereum, just from like a psychological standpoint, it's at $1,000. If that falls, I think just market psychology wise, like, there's going to be some blood, and who knows if it does. But I would just
Vitalik selling,
yeah. And that is in a way like reflexive, right? Vitalik sells, people in the ecosystem see, oh, this guy sells every top, they go sell, and it's like almost like a feedback loop. So I mean, I don't know, maybe it's just my bias speaking, but I would really like. I think ETH BTC doesn't. I think this cycle doesn't bottom. Maybe this is like completely irrelevant, but ETH BTC is at what, like 0.07, right? I just certainly thinking about Ethereum being just kind of like degenerate leverage Bitcoin beta, and it's like mostly kind of degen speculators that buy, hold, utilize Ethereum. That's maybe a broad oversimplification of it and maybe unfair to some people, but I don't think this thing bottoms at 0.07, right? So from a crypto native perspective, that may be one more thing that we have to slay in terms of like just flushing out all of this. But that's
the primary risk for me in that sense is regulation, right? Because, and we're actually seeing this already. So this is something that's
fully captured.
It's fully captured. So both at the consensus mechanism layer, but also when it comes to all of the DeFi protocols, this has always been the risk. They have all these American VCs. If KYC isn't coming to Uniswap within the next 6 to 12 months, I'll eat my cold card, right? This whole process. Oh, don't worry, I've got plenty. The whole process that all these VCs are fully captured. The consensus mechanism is captured, and essentially, and this is my argument, the whole thing, when it came to the merge and we're talking about slashing and all this kind of guff, my biggest argument is, okay, so when the time comes, the Ethereum community is going to have to make a social governance decision, and that decision is going to go one of two ways. They either have to side with USDC, the blessed stablecoin, which all their collateral and all their DeFi positions and all their liquidity pools and all their DeFi protocols and name your list. If you want to maintain any of that, both your personal wealth, which is a big one for most people, surprisingly, if you want to maintain your personal wealth, if you want to maintain the integrity of your DeFi ecosystem, if you want to maintain the reason that people use Ethereum at all, you have to come across to the KYC side. If, on the other hand, you want to go full rebel, well, you can go and choose your other fork, but I'm pretty sure most users are going to pick the other one anyway. So you're both going to slash each other onto your own chain. Ethereum's going to fork into two different variants. One's going to be the rebel chain, which will have some of the bankless guys on there for all 6 weeks until they realize that everyone wants to go over to the USDC side, and then the whole system just has to migrate back over. So they actually, in my view, don't have a choice, because otherwise they have to burn all the infrastructure and start again. And the problem is that all that infrastructure is already captured. So it's basically a one-way street.
I have my receipts. I mean, I have a tweet from 2018 where I said that Ethereum's going to be like the KYC AML de facto regulated chain. I mean, but that doesn't mean it necessarily blows up, right? It just means it's completely cucked and censored.
Yeah. And actually, I mean,
and all
to
the CFCs
Lynn's credit, Lynn Alden put out a tweet some time back, which I think is a very credible case, which is that it becomes captured, and that's actually a bull case for it, right? Lock up all the tokens
Yeah, a lot
and
of
allow
them
people
will
to
think it's.
withdraw. And
I mean, I think there's Bitcoiners that would think that Bitcoin getting captured is a bull case as well,
agree.
which is unfortunate. I mean, personally, what's on my radar is like Nexo, KuCoin. I don't think Genesis survives this. I think DCG like kind of stumbles out of it, but like gets pretty hurt in this whole thing. I think there's more. I think there's more shoes to drop. I don't want retail to get wrecked. I don't want the average person to get wrecked, which is why I constantly preach self-custody and tell people not your keys, not your coins. But personally, like I would like to see the most chaotic, painful end of this cycle and just clean it all out. Like the more carnage, the better. And I think there's a lot that just aren't on our radar. Anyone who's offering any of these centralized products that have been offering yield, quote unquote yield, they're all at extra risk here. So it should be interesting to see it play out. We're nearing the end of our time. Before we do wrap up, I wanted to ask both of you guys. I mean, Dylan, you often say you have like a lot of dry powder. I know you posted my post that I titled "Survival," which is, to me, I've always had a survivor mindset in this space in Bitcoin. And why is that? Well, first of all, I can't trade for shit, right? I know I can't trade for shit, and I did touch the stove early on in my Bitcoin journey. But the second reason is, there's a lot of survivorship bias in this space. People think like, oh, there's all these traders that did really well and they all succeeded. But really, the majority of them get washed out and destroyed in the cycles. And we only see the ones that survived. It's like 1%. And then on top of all that, I have this concern that I've had since almost like a decade now, and I've been wrong, which is that, it'll get really hard to acquire Bitcoin, whether that's regulated on-ramps getting shut down, withdrawals getting frozen. The idea of selling Bitcoin and buying back in is just something that I could not sleep at night. And this is coming from someone who's been all in for a long time, working many jobs to just continue accumulating Bitcoin slowly and steadily. So my thesis is essentially stay humble, stack sats, right? Just constant accumulation of Bitcoin, holding in cold storage. I can't even easily sell it if I wanted to, just because of how I hold it. So when you're thinking about your strategy, I mean, in that post in survival, like I said, the straightforward plan is relatively simple on the surface, which is to survive, this bear cycle, which could be long or it could be short, while still accumulating as much Bitcoin as possible, just in case we have some kind of short squeeze type of scenario, right? We're seeing less and less Bitcoin traded on exchanges. It's basically the same traders trading back and forth, while stackers are just constantly accumulating more Bitcoin and more Bitcoin and more Bitcoin. So there is like this tail situation. There's a situation where just like Bitcoin just starts ripping. And you want to be exposed to that, but at the same time, you want to be able to survive, pay your rent, support your family. Well, maybe not Dylan because he's a young gun still, but be able to do this in a bear market and a global macro recession, depression, whatever you want to call it, without your sats decreasing, without selling the bottom because you're desperate. So how do you look on actual like executing? Like, do you have like a lot of? I mean, I know this is like kind of personal question, but like, how are you looking at your personal plan? My personal plan is very straightforward and very obvious. I just keep stacking, and I'm trying to reduce expenses and increase cash flow wherever I possibly can. Like, what is your plan here on actual executing on the end of this cycle?
Yes, I mean, from my perspective, Dylan, I
away.
might just jump in because I got to jump off in 10 minutes. So from my view, I made a decision back in 2019. So I'm like you, Matt. I went through the process of buying the top in 2018, getting burnt with shitcoins all the way down. Finally discovered Bitcoin, and I made a very conscious decision in 2019 when it finally clicked, when I finally understood what Bitcoin was all about. Made a conscious decision that my strategy was to stay humble and stack sats. And what I'd learned is that whilst I could trade and whilst I could be successful at trading, what I found is that the amount of time that it consumed from my day that I felt at the end of the day, I may have made a bunch of money, but I felt so unproductive that it just didn't work for the way that my brain ticks over. So I made a very conscious decision that I'm actually going to move more towards what I do now, which is the on-chain side. And really the motivation for that is teaching people how to do it, right? That's why I actually do it. And the reason for that is that it does provide you with the edge, right? To just, even as a humble sat stacker, to understand if you're on a DCA schedule, trying to find the best edge that you can within your weekly or monthly, whatever your time frame is. And the other thing that I found is that there's so much more alpha for me in creating additional streams of income. So essentially what I went down the path of saying is like, well, I'm going to specialize. I'm going in one particular field. I'm going to specialize in a field that helps Bitcoin. I'm going to specialize in a field that helps others understand Bitcoin, which is obviously good for Bitcoin, and help other people survive, right? Because the more tools people have, the more people can survive in this market. And sometimes just the knowledge is sufficient for people to get by. So that was basically my strategy: generate more streams of income, specialize in something that's good for Bitcoin and helps other people, and essentially just build onto those two things and stack sats in the background, right? So when it comes to where we currently are in the cycle, I'm in the process at the moment of kind of building out a whole suite of tools and you can see this in all of our reports and videos and the like at Glassnode, but we're pretty much in a phase, again, we don't know what the future holds, and pretending anybody does is a joke. But when you go back and look at how previous market cycles have occurred, and this is why I said at the start of this session that on-chain analysis is a bit like behavioral economics. You're looking at how the human beings around us behave and in aggregate. And what you're looking for when we look at all these previous cycles, people say, oh, it looks like the previous bottom, and oh, this looks like the previous bottom. It's like, yeah, they do. But what you need to look for is, when was the point of maximum pain, the point of just complete expulsion that was sufficient to flush out every seller in the past? Because whilst market cycles are different, leverage is different, shitcoins are different, macro is different, there's one constant amidst all of, well, it's two constants actually, amidst all this thing. First one is TikTok next block. The second one is that human beings and the way that we respond to fear and greed is the same. It's never changed, right? This is why you can go back and look at price charts from the 1920s and they still have TA patterns in them, right? So the human response to things is exactly the same. So what we're looking for at the moment is, do we have the same conditions that was enough to expel any and all sellers? Every single person who's not a Bitcoin hodler is flushed from this market. Do we have the same conditions? And I've said this a number of times, but we're kind of in a stage that if you just take that view, What are the conditions required to flush absolutely everybody out who is going to sell? We're dotting the I's, crossing the T's on a perfect example of that. It's textbook. So it has all of the conditions that you would ask for to have a perfect textbook bottom. So thus they can then start looking from that point on and say, well, if we start breaking some of these trends, then we really do have a macro is in charge and leading this thing down a different path. Simultaneously, if macro has any potential, it's going to start reversing and turning around, or moving back towards looser monetary policy, which I think is probably a almost guarantee. Bitcoin's going to be the first thing in the world to sniff that out. So, it's probably going to bottom long before we even know that there's going to be some kind of reversal. And, we're seeing a whole lot of pain in the market. But if I kind of boil all that back to some actionable steps, build your income streams, right? Focus on what you specialize in and what you're passionate about, because that will help you build more income streams. And as you said, Matt, I think that's a really important one, is cutting down bills, right? Understanding where your money is flowing out of your pocket, and cutting that down. And the other one is when it comes to, stacking sats, you can apply strategy to it. So you can do your DCA. The way that I do it, I DCA once every week, and I use my own edge, right? The tools that I have to try and find the most opportune moment in that week. If the week looks like absolute shit, and I'm like, well, I just don't think I think it's headed lower, then I'll double DCA in the next week, right? But you can use tools to help maximize your sat allocation. And simultaneously, that achieves two things. One, you get more sats. And two, it also teaches you about how the system works. And when you understand how the system works and you can explain it and describe it, you can then use that information to survive. When you have no idea why things are going down, when you have no idea why things are going up, when you have no context whatsoever, it makes it really hard to hodl through both the highs and the lows. But if you understand why things are doing what they're doing, you can then rationalize it and use that information as your edge. And it makes hodling so much easier. It's such a better journey, because when someone shit posts something on Twitter, you can go to your toolbox, pick up the right thing and say, yeah, no, that sounds about right. Or you can say, no, I'm calling that bluff. I know something different. And when you see these narratives get carried on Twitter, and you can then look at the data, you're like, what are you talking about? You're just wrong. And this was my big takeaway from 2021. I ignored the on-chain activity. I was tweeting about it back in August and September, saying this rally has no on-chain activity, right? There's no one using the network. And I followed that gut instinct all the way through to October. And then price punched to a new all-time high. And I said, shit, maybe people are just on exchanges trading paper Bitcoin. And it, on-chain activity doesn't have any signal. How wrong was I, right? So I will never make that mistake again. The actual usage of this network is pure edge, and a lot of people write it off, but it was the thing screaming, this is a lower high, it's not a higher high. Price may be at all-time highs, but it looks nasty underneath. So anyway, that's my kind of two sats on how to survive this thing.
Awesome. Thanks, Checkmate. Appreciate your time. I know you have to drop. Just in general, it's something I've noticed is that, in bear markets, the ones who stick around, who continue their education, who try and understand how Bitcoin works and be humble enough to realize that we never fully understand these things and we're just constantly improving. That's where the conviction's built. I mean, that my conviction was always built in bear markets. Bull markets are just for noise and celebration and shit posts. And then the bear markets are where you actually build your conviction.
So a strange one, actually, maybe you guys haven't answered this, but I was telling myself during the bull how much I absolutely despise bull market rhetoric. Like the bull markets are just absolutely heinous when it comes to the topics that are discussed, the amount of shitcoinery that's going on, and you just look at all this stuff. You're like, I just want it to be a bear market again. And I remember Permabull Nino, one of my good friends, he said the problem with the bear market is that you want it to come during the bull to clean up the discourse, but then it comes and it just gets so much worse. But having now been, we're now deep in the bear market, and even with the price down and even with all the chaos, the amount of this bear market has been so much more intellectually stimulating than the bull market was, by an order of magnitude. So I'm now actually going to say that having experienced two full-scale bear markets, right, from 2018 onwards and then 2022, and well, I guess you call it one bull cycle, I prefer the bear market. I prefer the discourse. I think that people are more sane, they're more level-headed, and I think overall it's I don't know, it's just superior. Curious on your thoughts.
It clears out the bullshit. I mean, 200K by conference day, Capso Dell, like it was all like kind of, it started all as like a commentary on all the bullshit. And then I will be honest that I did, get high on my own supply a little bit. I mean, 2 days before the conference, we were trading at like 36K, and I said 200K still in play, all caps, and it got like 2,000 likes. Like that. In the bull market, it's just all bullish shit posts, and there's just so much noise. And then the ride or dies stick around for the bear market. Most do not. Most get wrecked, and rinse and repeat. Okay,
Yep.
well, anyway, thank you, Checkmate. Dylan, I'm not letting you escape this question.
Yeah, no, check. That was a good riff. I agree with a lot of it. No, I'm still sitting on a bunch of dry powder. Around March, I did sell a top, and I still have a fat stack in cold storage. I did sell some Bitcoin. I know that's a sin. In the springtime.
It's not a sin. You can do whatever you want.
No, I know. I'm just joking. I
repent.
Yeah, no, I gotta repent to Satoshi here. No, I've been sitting on mostly cash, and the thesis was that Bitcoin, the BTC, numerator of the equation is can be. My conviction has only strengthened despite trading at 16K, being 75% down from the highs. I do have just a small DCA that I actually did crank up a good bit, so I am accumulating, and I just send that to cold storage. It's not a fat amount of my stack or of my dry powder rather, and it's perfectly sustainable with my income. I mean, I feel good about that. That's not even investing for me. That's saving. Did well from like a legacy standpoint in terms of like trading some of these markets in terms of equities, bonds, shorting some of this stuff. I will say, in a completely hypothetical standpoint, if I could short some of these shitcoins, I would. And, if I had access to these derivative exchanges offshore, I would have shorted some of these things that I posted about, but purely hypothetical, of course. I guess more so it's just I'm kind of just waiting. I'm plenty patient. People were trolling me, trolling Bitcoin Magazine over the last or our newsletter or whatever that does like market commentary about saying that we still think there's some headwinds. And so certainly from like a 4-year cyclical standpoint, like the below cost basis, like market value to realized value below 1. So Check talks about the realized price, like the average price of all holders. That's around like 20K or something. So it's kind of like that same sort of like, this is a typical bear market, right? I just think, I really want to see how Bitcoin plays out if we go through another risk off period. So I mean, I'll do my best in terms of saying what a bottom is, and I'm not going to nail it whatsoever. 15.5 could very well be that. But even if I allocate at 20,000, right, or whatever, as like my dollars, like dollars in a weird way have an asymmetric during bear markets. Obviously, it's opposite in bull markets, but during a bear market, dollars have an asymmetry in Bitcoin terms, right, where like something can fall 50% and your purchasing power 2x's. So I'm just staying patient. Like I have no real worry. And I honestly, like I say this as someone that had over 100% of my net worth in Bitcoin in 2020 and 2021. And so I don't feel real.
Is the majority, and you can tell me to go fuck myself. Is the majority of your net worth like in dollars in a bank account?
No. Yeah, go fuck yourself. No. No, I have a good amount. I have a good amount of fiat purchasing power at the moment. Paradox.
How do you sleep at night?
Yeah, I don't. It doesn't feel. It feels kind of gross, to be honest. I'm sitting in a T-bill ETF with some funds, and it just feels fucking disgusting, to be honest.
Wow.
But I've been sitting there for a little bit, so did I foresee 3 arrows in Luna and all this stuff blowing up? No, but kind of just staying patient has served me okay. And like, is it a high time preference potentially? Like I'm not in and out trading, buying, selling, and more so just holding steady, steady lads. And I plan on once again probably going like absolutely aping into Bitcoin with everything. And if that's at 20,000 or higher, like I'm fine with that. But it's treated me well just to stay patient. I kind of want to see hash rate fall off a cliff. We're already seeing that. It's at like 13% from the highs. I would prefer to see some of these shitcoins implode. Who knows about the Tether Binance stuff? I have no idea how to quantify that. And I kind of think that we still have another volatility explosion in legacy. And I understand, like for most people, you should just buy Bitcoin with a part of your disposable income and chill. Given my job is kind of to look at this stuff 10 hours a day, of which I do, I think I may, and who knows, maybe I'm just fucking an idiot and I have no edge whatsoever. That's totally plausible.
Dylan, you're a self-described ride or die freak. Listened to RHR for years. Do you remember Murad?
Yeah, totally. Yeah, I mean,
Good on
no, I
Murad.
get it. I certainly am not levering up on BitMax, right? So it's more so like I'm just waiting to deploy the powder rather than levering up and becoming a forced seller.
You're a good friend, so all I want for you is to end up with the most amount of Bitcoin possible. And like I hope that we can be having these conversations for many years in the future, looking back. For the ride or die freaks, they'll know that Murad has not been on either of my podcasts in a long time, because he got absolutely wrecked in March 2020. But there was a lot of really great RHRs before that where we had him on, and we basically argued about trading versus staying humble and stacking sats.
Well, I mean, I'm not really trading per se. I'm more so just sitting on cash. I mean, given most of the population, my Bitcoin position is probably completely outsized, and I'm fine with that.
Yeah, fair enough.
But yeah, is that a fair?
I'm not trying
answer?
I'm not trying to like bully you.
You're trying to shame me into just aping.
I'm not trying to shame you.
I mean, Check's Bitcoin balance is at all-time high. So, I mean, I'm looking at this thing and I see the price and I'm like, yeah, nah, I'm good. Keep your stinking Australian dollars.
I just don't trust. I don't trust the banks. Like by the time, like Bitcoin is kind of I think most people agree at this point that Bitcoin's a macro asset. And if we're in a global recession, potentially going into a global depression, if we see currencies are going into hyperinflationary phases, and they're all going to happen before U.S. dollars, but I just don't trust dollars in a bank account.
Yeah,
I just
I kind of agree
I
with
can
you.
get my access cut off at any moment. So I'm willing to take, an 80% haircut on paper to just hold through it all. And that's kind of where I'm coming from it, right?
That's one of the things that I am debating. And I was talking to Preston, and Preston he was sitting on all of his free cash flow for 2020, and he bought some at 19. He said he like bought 15% of his free cash flow or whatever. And he just,
I was like such a bear.
He just said he plowed everything in at 16,000 or something. And he's like, man, I just don't see these rails. Like, am I going to be able to access an exchange? Like, is it, and that's one of the things for me is like, I also agree. It's like, I don't, what if they're just like, oh, your fiat on ramp is cut off. Like that's
You're also a young kid that's crushing it on the analysis side. You're crushing it on Twitter. Like the day FTX was like going down and the run was happening, like I just turned off my phone. I took my lady out to jazz. I slept beautifully that night. Nothing had changed for me, right? I mean, you were killing it on Twitter at the moment, but like
the only thing that's changed is the price. And that's a really important perspective, is the only thing that's changed is the price, right? Bitcoin is exactly the same as it's been for many years. Nothing changes except the price. And that price is just human perception, right? But the more work you do, the more you understand that perception is often wrong. And people just can't see where this whole thing is going, right? People aren't bullish enough.
Well, Check, I'm glad you stayed along. Aren't you like 6 minutes late to your call right now?
No, I'm the driver, so I'm waiting for that moment. But I'll be here until I get the signal.
Okay, well, I mean, we've been going for 2 hours. This has been a fantastic conversation. I'm glad both the boys joined. Let's just wrap up with some final thoughts. Checkmate. Final thoughts.
Yeah, I think final thoughts. If I kind of bring it back to where I discovered Bitcoin this time last cycle, right? So it was the first time I finally read the white paper. I went through the process of, I've seen my portfolio again, 99, 99, 99, and finally, all right, I'm clearly doing something wrong. And then I finally read the Bitcoin white paper, and from that point on, my orange pill was listening to Pete McCormack's series on Mount Gox, because you realize that way back in the day, before Bitcoin was worth anything really, people were willing to go and fight tooth and nail to get any kind of ownership structure over it. So my advice would be to start learning, right? Keep learning about BTC. There's so much content these days that just didn't exist, even 3-4 years ago. A shameless plug. If you are looking to kind of learn how to read these charts, because this is the thing, right? The memeability of on-chain analytics, it's a blessing and a curse, right? But from my perspective, there's elements of curse there, and that is because there's a lot of folks who will just post a chart but don't give the context. So what I'm trying to do, and my team is trying to do, is give you the context, so you actually know which tool to pick out of the box to answer particular questions, right? Contextualize things, bring it all together. So keep learning, keep studying this thing, and if you understand the hodling in the upside and the downside, is just so much easier.
Yeah, thank you, Checkmate. During the bull market, I would take, I did it a couple times. I would take a on-chain chart that Dylan posted that was bearish, and I would add a bullish caption to it, and I would tweet it out, and then I would just send him that my engagement was higher than his.
Yeah, it was like, I forget some of the captions. Check, you've been awesome with your Glassnode series, your all that stuff, dude. It's second to none, man. And I've learned a lot from you personally, so thank you. And keep it up.
Appreciate it, Jack. Dylan, final thoughts.
Yeah, I mean, I've never been more bullish on Bitcoin. My conviction is completely unchanged. Not going anywhere. Bitcoin's not going anywhere. It's kind of fun to be in the eye of the storm of this thing. And the most bullish thing about it is it's so widely understood still. The crypto people don't get it. The macro people don't get it. And it's been quite a vindicating year from a Bitcoin maximalist perspective, despite the price action. So yeah, I mean, we're gonna run it back, and the world is not ready for what comes next, and I have all the time in the world to watch it unfold. So yeah, appreciate you having me on, man. It's been a fun rip.
I appreciate you, Dylan. You've become a good friend too, so I just appreciate you in general. One last thing on-chain data, as a privacy advocate, I would like it to become less and less relevant if we do well on the privacy side. It shouldn't be as valuable to people, but we shall see.
It will still be valuable because you'll still be able to see macro flows of funds. So even with privacy, you can still aggregate that into just transaction volumes to and from certain places. But what you're looking for there is aggregates, not individuals. So even if you do have privacy, basically the only time that on-chain analytics, in my view, will lose signal is when no one's using on-chain. So until the chain stops having any transactions in the blocks,
well, that would be bearish.
That's when it loses signal. That would be and that would be bearish, in which case
everyone would just be trading paper Bitcoin on exchanges.
Yeah, I would love to see your bullish caption on that chart.
Fair enough. I mean, less valuable is what I would say.
Okay, I'm gonna send you the most irrelevant on-chain chart in the world, and I want to see you post it in all caps. This is bullish.
Well, dude, now you're crushing me on Twitter. Anyway,
what is it? What's the most irrelevant chart?
I don't even know. Just like I was just looking at like median transaction
I thought you had one in mind that you've been tracking. Like, this thing's complete shit, of which there are some.
Yeah, I don't know. It would just be funny.
Boys, it's been an absolute pleasure. I hope to have you both back on sometime soon. I really did enjoy this. To all the freaks, thank you again for joining us in the live chat. Thank you for supporting the show. whether that's through Podcasting 2.0 apps or going directly to satsperminute.com and donating through on-chain or Lightning. You can view everything live as those donations and support come in. We're going for radical transparency here. We're going for a value for value future. No ads, no sponsors. Let's prove the haters wrong that you can actually, have a show that thrives without edits, without ads, without sponsors, with a live interactive chat, trying to do things differently here. I do appreciate you all. I know it's a bear market. If you can't contribute sats, share the show with friends and family. Subscribe on your favorite platform, whether that's any podcast app, whether that's YouTube, Twitch, Rumble, BitcoinTV.com. It really does help. Leaving reviews helps. All that helps. I really do appreciate you all. I know this dispatch has been a little bit different than other dispatches, but I felt like it was a very relevant topic with some great people. I love what these boys are doing in the space. Next week, we will be going back to heavy technical discussion on open source software. I'm having the boys from Udemy, the privacy-focused Lightning wallet that can run in a web browser, on a bunch of Ride or Die freaks, Ben the Carmen, Paul Miller, Tony Giorgio. They will be joining on Monday. That is 4 p.m. Eastern, 2100 UTC. So definitely be back and join us. I love you all. Stay humble, stack sats. Thanks, guys.
Peace.
Thanks, guys. Cheers.